Hello, everyone, and welcome to Asset Management Awareness Month. My name is Kim Sager, and I'm the VP of Communications and Marketing. Today is our third webinar in our Awareness Month series. Before I get started and I introduce today's speaker, I'd like to run through some logistics. This webinar is being recorded and will be posted on our NPMA website and YouTube channel later this month. If you're an active NPMA member logged in today and listening, you will automatically receive CEU credits. The slides for today's presentation are posted in the handout section of the GoToWebinar. And then lastly, if you have questions during the presentation, please write them in the question box and we will review them as we can. Now I'd like to introduce today's speaker, Ms. Yvonne Batcher. Yvonne is a Senior Director for the Property Management Office for Stanford University. She has held staff and management positions at research-intensive higher education, research and development, and commercial manufacturing organizations throughout her career in property management. Her credentials include a master's degree in education, certified professional property manager, and recognition as an NPMA consulting fellow. She is an experienced instructor, having delivered training and education at many levels to novices as well as seasoned professionals. Yvonne is an NPMA instructor of property management and certification courses and is a frequent workshop presenter throughout the U.S. She is keenly focused on mentoring and providing professional development guidance to individuals in property management and related fields. In addition to mentoring within the NPMA community, she is actively involved in mentoring within the talent development program for the Business Affairs organization at Stanford University. As a longtime active member of NPMA, she has held numerous positions at the chapter, region, and national levels, including national president. Yvonne is currently serving as the NPMA's National Vice President of Administration. She is the recipient of the National Jack E. Griffiths Property Person of the Year Award, and most recently the Anderson Award, Lifetime Achievement Award in recognition for her contributions to the NPMA property management profession and a broad spectrum of those she mentors. Yvonne, welcome to today's webinar, and thank you so much for joining us.
Thank you, Kim, and welcome everyone. It's exciting to see that we have had a very successful Asset Management Awareness Month, and I'm happy to help contribute and share some information. Hopefully also, as if you have questions along the way, I think, Kim, it's okay for them to go ahead and put them in the chat, correct? And you'll let me know if any questions or comments. Yes, I absolutely will.
Yes, in the question box, yep.
Great, thank you. And again, welcome and good morning or good afternoon from wherever you may be. Greetings from actually Redwood City, California today. Given that we work in different places, I have to think of where I am on a given day. So I'd like to focus on a few aspects for successfully managing equipment at a university. And there's so many different things we could have focused on. So I try and pick and choose on what might be kind of the most relevant for the day and looking at a well-rounded perspective. So we're going to be looking at four different aspects of things. A bit about compliance, because we could do certainly a whole 2 or 3 or 5 day course on compliance requirements within different regulatory environments. But we're going to look at a few key things and concepts relative to compliance. Of course, business operations, that's, our everyday, keep things going, keep things working, keep customer service going, being able to continue with the mission and the objectives of the university in this case. Whether they be educational, just business operations, research, etc. And then, of course, we can't do any of this without people and leadership of teams or individuals within our organization. So we're going to look at those various different components of things. So starting first with compliance, because that's always kind of the elephant in the room, right? Compliance is often the focus of what we do, the reason behind a lot of what we do. And compliance is critical, in fact, for our success, particularly for those areas that are research intensive. Whether you have a small amount of research or a significant amount of research, or do any kind of work with an outside entity for which they contract with you, with your organization to do, even if you're a non-research university, compliance falls into place because there's still HR rules you have to follow. There's still procurement rules. There's still state and local rules that come into play, even if it's not so much research, quote unquote, related. So it is a fundamental piece of what we're going to focus on today. And the listing you see on this slide in terms of resource requirements is more about, I wouldn't even say it's an all-inclusive list, but it's a common list of sources from which we get what I would call our compliance requirements, right? So depending on the types of work, the types of research, the type of activity your organization is involved with, whether you're private or a state organization, university, a small university, a large university, domestic or international, all of those things come into play. But this listing here is probably, I would say, the most common listing of the types of compliance requirements or regulatory requirements. Sometimes they're referred to as guidelines. Some are explicit requirements. Some are just guidelines and kind of standards that we work with. However, it's the importance here is two things. One, it's a pretty long list, and each and every one of these has its whole myriad of complexities, right? Whether it's, from what source it's coming from, et cetera. So we're going to explore that just a little bit. But fundamentally, what we want to be sure and do is kind of find the common denominator across these sources or these requirement documents and understand that within all this, although there's a whole lot of variety, there's a lot of commonality, and we can establish hopefully a single, for the most part, a single property management system or processes within an organization that can fulfill the needs or fulfill the requirements of all of these different sources, depending on how they apply to your particular organization. But if I were to start with a checklist, if I were to start looking at things and say, hey, where do I have to hone my skills, or what do I have to understand better? I would probably start with this list and look within the requirement documents at the property related sources. Two things with that. Don't look for just the keyword property management or government property or capital equipment. Okay? Look for things such as cost accounting standards. Look for things such as indirect cost. Those types of activities that relate or could be involved with equipment, but aren't necessarily what we would consider property management per se. So broaden the spectrum in terms of what we're looking at. Pardon me. What we're looking at within those documents, because some of them can be fairly lengthy and very circular in the way they're structured, meaning one section refers to another. So understanding where all those dots are connected is really, really important. So once, assuming that we have, pardon me, a combination, and I apologize, allergies are just at the peak season right now here. Assuming that we have a combination of agreements, and agreements, I use that term generically, meaning grants, contracts, et cetera. Another thing really important to understand is, where does property fit in to the awards process? So if we're getting funding from these various different agencies or organizations that impose upon us compliance with these regulations, where does property fit into the picture? So I've broken it down into kind of three very fundamental phases in terms of generically what I would call the awards process, meaning this is the source of funding that comes into an organization. And oftentimes from a property standpoint, we see things kind of after the fact. The award is already here, maybe it's even been here for a while, and we happen to hear about it because now there's a purchase of equipment going on. But there's different facets of this that property and the information we have to provide can be of help to the process. It's not that we own the process, we can certainly contribute and help to the furthering of that process. So in the pre-award or proposal process, all the way to the time the award is made to your organization, we have information about existing assets in our area. We can answer questions about what equipment is available. We can look at the history of budget preparation within a certain project or a certain group. We can do availability screening. There are some cases, and I think particularly, I know currently we here at Stanford, it's the season, not just for us, but generically it's the season for applying for what's called an S10 grant, which is a special funding allocation for the acquisition or the building of a specific asset. And one of the requirements in the proposal or applying for those awards is that you have to provide a certification, if you will, of available or lack of availability of the types of resource that you're trying to acquire. So that requires a special statement that goes into it. Property is the key role to be able to do that in terms of seeing what's available, looking in your system, knowing how to fill in that report. Also, for the incoming process, are there going to be transfers? And looking at the information and providing guidance from that perspective. The second phase of this is what I call the period of performance, meaning you have the award, it's going to go through its entire life cycle from beginning to end, and this is where kind of the meat and potatoes come in terms of what property does, right? We really kind of hit the road running in this case, because this is where all the work that we typically see from a property management standpoint happens. This is where there's acquisition. This is where there is utilization, record keeping. We do physical inventories. We monitor the use of that equipment. We execute disposition instructions, meaning if the sponsor owns the property, we need to have a process in place to be able to say, hey, you own this, what do you want us to do with it? Provide us instruction or guidance. And it's also the area, the time in the life cycle of an award where the subject matter expertise of property management really is essential. And we'll talk a little bit in a few minutes too about some of the partnerships and collaborations that are essential. But within a university environment, if you have any type of research award or performance services that you're doing for an organization, these are the types of things that are really, really essential. And all of these, of course, the underlying fact is that you have established policies and procedures. You have training, you have documentation, you have systems, etc. So again, this is just kind of a checklist of things, is where can we fit in and where do we add value within our organizations from an awards process. So this is the lifetime of the award. This is from the time you get it to the time it concludes, and then you need to proceed to what I refer to as the closeout phase, meaning the work is nearing completion or has been completed. And here again, property has a subject matter level of subject matter expertise level that is really commensurate with making that closeout process very smooth. Transitioning items from one contract or one award to another, transferring, maybe you have movement of faculty coming and going relative to different types of awards that are happening. There's a time frame issue here too. There's a timeliness issue in that you want to be sure and complete that closeout process within a reasonable amount of time. You can start it fairly early once something becomes excess, once an asset becomes excess, but once that period of performance is closed, oftentimes you have a very specified period by which you have to complete your work, your transfers, your disposition, and then send in your certification of completion or your letter of completion, your final report, whatever documentation you have to say, everything that it was accountable to this contract is now disposed of or transferred, and there is we can close out this activity. Sending that documentation is really important. It is one of the pieces that this sponsor agency looks for, amongst other things. There's financial reports, there's copyright reports, there's data certifications, there's all kinds of other closeout activities, but property is an important piece. And again, within the third and final phase of a project, this is where the information and our process and our subject matter expertise really comes into play. So keeping an eye at that closeout period, the timeline, making sure that everything is done. And if you have to incur, I should say, a property acquisition during the end of that award, be sure that you have a good justification in place in which to do that. So that's kind of a 50,000-foot view of where property fits into that award process. Now let's take a look and see, I mentioned awards, I mentioned contracts. There's all kinds of different agreements. This is a long list, and no, we're not going to go into detail on every single one. But again, to show you examples of the complications that can arise, the types of agreements we need to be cognizant of. They may or may not all apply to your organization, but I would be willing to bet that at least a third of what's on this list, if not half, exist within your organization. If you are particularly a larger research university, chances are you're at some point going to have all of these types of agreements, or the vast majority. Each one of them has its own nuances. Each one of them has its source of regulatory compliance requirements. Ultimately, remember though that each agreement has its terms and conditions within that agreement, and that is going to supersede anything else that's in process. So knowing what's in that contract, knowing what's in that grant, knowing key things, and I'll highlight in a few minutes some key, at least one of the really critical things to know when it comes to particularly grants and contracts. I would venture to say grants, contracts, loans, donations are probably the most common. Co-op agreements probably come in next. The others get into fairly specialized activity. But each has its own nuances. Each require and indicate that we have to collaborate really closely with the contracts office, the procurement office, the principal investigator, faculty, staff, other aspects of property management if we happen to be a decentralized function. So again, it's just to kind of lay the map and lay the groundwork that potentially what we do can be somewhat complex, not impossible, but just complex, and understanding the nuances is really important. So we have this list of agreement types. Okay. Regardless of what agreement type it is, here's some fundamental principles to keep in mind. For that particular agreement, for each particular agreement, absolutely be sure you know who's the sponsor. Okay. Is it a federal agency? Is it a private company? Is it a private individual if it's a donor, for example? Who's that sponsor? Knowing that source is going to be one of the indicators of what regulations do I have to follow. Okay. Knowing the financing structure. Is it a fixed price? Is it cost type, etc.? Because that's also going to be indicative of how you proceed from a budgetary and expenditure standpoint. Having it be a domestic or international, very different ballgame that you play. In cases where there's international agreements, different terms, you may have to apply by laws of different countries, different procedures. Something even as fundamental as what is the currency exchange rate may come into play. Is the award you're getting prime, meaning is it directly from that sponsor, or is it coming through another organization in which you are a subcontractor to them? All of these things come into play, and what do they indicate? So if you look then at the right-hand column on this page, then once you know the things here on the left, you can go forward and understand what regulations apply. Am I dealing with the FAR, or am I dealing with uniform guidance? Or am I dealing with some other private terms and conditions? Am I dealing with exceptions? Okay. What type of property is coming in? So knowing the sponsor and come to think of it, actually in that second column, I should have put scope of work on there. Knowing what type of work is going to be done. The third bullet on the right, and I'm going to elaborate on that in just a few minutes, title or ownership. If I were to choose one thing, one single thing to absolutely know at any given point in time about an asset, is who owns it. Because who owns it is going to always indicate to you what you can and cannot do and how you can and cannot do certain activities. So I would definitely circle that one as a priority item to understand. Knowing how you're going to acquire, is property going to be furnished or is it going to be purchased through your organization? What is your general ledger? What is your accounting system and your structure? How do you code things, making sure that they roll up into the right reporting categories for managing the expenditure process within that award, I should say. And life cycle stewardship and management, that's just my way of saying, hey, this is everything we do during the life of that award. Do we assign it to a custodian? Do we assign it to a department? How do we report it? How do we inventory it? So again, knowing the details on the left, all kinds of agreements, right? So once you have an agreement, know these details on the left. Who's the sponsor? What type of award is it, etc. It's going to lead you, these are stepping stones. It's going to lead you to knowing what applies, what am I expecting, what should or should I not be doing with it. So these are kind of leading stepping stones, I would say, to ultimately being able to go on with your everyday activities in terms of property management. So one certainly builds on the other. One goes from the very general to the more specific in terms of not only what am I doing with that agreement, but what am I doing with that asset? Okay. So taking it to the asset level now, as I mentioned, title or ownership is probably, I would put that at the very top of the list in terms of information to know. Knowing, as I said, who owns it indicates a lot of things, a number of which are listed here on this slide here. Okay. What are the expectations in terms of how can I use this? Are there use restrictions? Is it limited to use on a particular contract or on a particular program or type of activity? Okay. What do I have to do in terms of stewardship? How do I manage it? How do I report? What do I do? How often do I inventory? Can I dispose of it? Can I sell it? What happens if I were to cannibalize the item? So all kinds of nuances. Can I, another one that comes to mind frequently is, can I purchase an item with shared funding from different awards? What are the implications of that? So these are key things that knowing who owns that asset is going to lead you down the appropriate path of what you need to do and how you need to do it. Well, let me clarify that last statement. What you need to do. The regulations will, as far as I know, not tell you how to do things, but it will say this is what needs to be done, and it's up to each organization then to establish their policies and procedures in terms of how they accomplish things. Okay. Kim, do we have any questions so far? Just touching bases real quick.
Nope, you're good.
Okay. So let's move on to a little bit of explanation on title. And some of you may be familiar with this, but this is always good to reiterate. Looking at two aspects of things. From a top level, going back to that agreement slide, at the top we had contracts and then grants. In many cases, we probably get more grants than we do contracts, but still they're in the top two. Grants will always operate, federal grants, I should say, US federal grants, will always operate under the uniform guidance, CFR section 200, okay. .3.3.13, excuse me, will lead you to the section having to do more with property. So ownership of items that you purchased, key thing, under a grant, as long as it has the uniform title clause in there, title will vest with the acquiring, they call it the non-federal entity, AKA you, the university. Title will vest with you, or ownership will vest with you, generally the expectation is without further obligation or without further responsibility, meaning there's no strings attached. But in some cases, title is conditional, meaning there is a period of time in which they can recall title, or you may have to track it in a certain way. So that issue of conditional title is always going to have that little connotation that, hey, it's not fully yours until the end of the award and until you actually get confirmation that it's titled without further obligation or without further responsibility. So that can be clarified up front by including the words such as exempt property, or explicitly saying acquired property title vest with the non-federal entity without further obligation. Key thing is, unless that's explicit, then it's conditional, meaning they have that period in which they can essentially recall it for other use for a certain period of time. But knowing that it's yours, not you personally as in the individual, but you, the organization, at the time of acquisition, if you are subject to, say, sales tax, sales or use tax, then that transaction is taxable. And you record it as such in your books. If it's on a contract, okay, now talking different animal, grants versus contracts, and there's all kinds of different nuances between the two. That's a subject of a whole separate session. But on a contract, then generally speaking, unless specified, and I'll give you an example of what is good to have, but unless specified, government property or acquired property becomes title of the government or owned by the sponsor, the federal sponsor. If they furnish it to you, meaning, hey, it came in from another contract, another award, then typically it's going to be title will retain with the government. Okay. Now, if it is, and I just said this, sorry about this, the government shall retain title to furnish property. Now, there's a different window of opportunity here. Looking at the top part of this clause, the FAR, and I forgot to mention, I apologize, I forgot to mention that the federal acquisition regulation then applies to contracts as opposed to uniform guidance applying to grants. Be sure that your organization gets in the contract the alternate to clause, because as you see in red, okay, it gives you right up front, if you're purchasing items, anything under $5,000, title will vest with you, the contractor or the university. Anything over $5,000, then it's as the contract describes. Okay. Generally, those are going to retain government ownership until the end of the agreement, and then you can request a title transfer, which is another good thing to follow. But at least this gives you the opportunity right up front to treat items that are costing under $5,000 as if it were your university's own property. So lots of nuances to this, but just a key thing to include, and is a really delineating fact that influences ownership on grants or contracts. Key thing with alternate 2, it really should be, I'd say must be invoked at contract execution. If by chance it doesn't come in the contract, you can request for it to be included. But ideally, it should be at the inception of that contract. You must still get approval for purchases. However, that can be done in a more blanket way. The thresholds, you just saw the slide where under 5,000, the university owns the property. Over 5,000, so there is a threshold. And you may end up with a single agreement or a contract that has university-owned property as well as sponsor-owned property. So it kind of complicates the reporting process. And you need to be sure that if you subcontract, that you do flow down those same provisions. Okay. So in terms of contracts, terms and conditions, regulatory requirements, it's really, really important to understand the implications of what each requirement means and what it means for you in terms of operation. How much risk is your university willing to take? And I'm not saying this saying, oh, how much can we quote unquote get away with not doing? That's not what I'm saying at all. but how tight, how detailed do your processes need to be, and what is going to be your self-assessment process to be sure you're within the high level of accuracy that you need. And we'll talk for just a bit on that process in just a few minutes. So main thing here, ensure you have good accountability, you establish those meaningful processes, and you build integrity within your system. Now, there is no one-size-fits-all mold. I can't sit here and say, hey, here's a recipe book, right? Here's a recipe to follow, and this property system fits for everyone. It's going to vary depending on your organization, okay, how complex you are, what type you do, how you handle your oversight, but really sound, good business practice and understanding those regulations that apply for your organization is really going to be a key to your success. And keeping things going, let's talk a little bit about just kind of everyday business operations. So we're really dealing with a whole bunch of things. Look at it. I like this this image because if one piece of the process is broken and it breaks the stability of everything, it could lead to other implications and other challenges. So we have the areas that from a compliance standpoint were listed as expectations, right? I would say that's another way of looking at your terms and conditions or your business outcomes, if you will. These are standard processes that exist or should exist within a university for good property management. And then there's kind of what I refer to as the soft skills, right? The darker blue boxes or shapes here indicate things that are more prescriptive, right? The shall haves. Those that are in the lighter blue, these are more the soft skills, the business processes, the business acumen, making sure that all the pieces fit together. Some of them are HR related because from a personnel standpoint, think of it this way, can we really do our jobs without people? I suppose in one case, one could argue, yeah, everything could be automated. I would venture to say that it'd be very, very difficult to not have involvement of people and teams in doing what we need to do. And that really leads us to the importance of having to have good collaboration. Okay? Establishing partnerships with other groups within your organization. The outer circle of this, and I love this image, but the outer circle really looks at kind of the big picture, right? The 50,000 foot view of aspects that we need to look at. And then the inner sprockets, I guess you could say, in the wheel, the inner spokes here, they're departments or functions within your organization. And yes, we like to think that property is at the center of things. And I'd say that a little bit tongue in cheek, but intentionally it's there because the common denominator that we have with all of these potential business units within our organization is equipment. Okay? You can look at equipment from all of these different aspects. It's not just buying something, tagging it, inventorying it, and then disposing of it. There's a whole lot of other nuances. And building those partnerships, I think, particularly in a university environment where things are much more open, I think. Having come years ago from a corporate background, that's a much more, and I use this term carefully, but it's a much more disciplined environment in a different way. Universities are, yes, we are disciplined in what we do and how we do, but there's also that kind of freedom of thought, freedom of invention that is a little more open than in a more structured environment. And it really leads us to the criticality of building rapport, of building emotional intelligence, and really partnering with our key stakeholders and key partners in processes and adjusting our approach as things change. I mean, heaven only knows in the last 2 years, how many times have we had to turn on a dime and think of doing something a different way, but still managing the risk that's associated with perhaps not doing it or minimizing the oversight over something. So one of the ways to keep a good overall control or managing of things is by having good internal controls. What are your key processes? What steps in your process of, say, acquisition or receiving or inventory or managing agreements, what key points in those processes absolutely have to happen and are determining factors in terms of your accuracy and level of compliance? So identifying what those processes are, who's responsible, what steps must happen, what's a key control versus what's just an administrative process. And maybe it even gives you an opportunity to look at steps and say, hey, why are we doing 12 steps in this process when the essential steps are 5? And those are just random numbers I chose to mention. But internal controls is a great way to build a process internally or to verify the processes that we have and to focus on the key areas. Typically, that ties into internal self-assessments and audits, and we tend to look at just certain things. I would venture to say and suggest that we use the concept of self-assessment or of assessment in general, not just to look at what we call the functional areas or the business processes within property, the administration of physical assets, if you will, okay? But expand that concept to assess, how do we delegate authority? How do we set authority limits? How do we structure job descriptions? How might they need to change to accommodate things like remote work, et cetera, that are really here, in my opinion, they're here to stay. And I would venture to say all or most of you listening to this webinar today would agree with that. What is your structure for separation of duties? So use that assessment concept beyond what is just your physical, tangible management of asset processes. And if I were to take a bird's eye view at what that assessment process might look like, here's one example. Okay? Again, it's not an all be all. Okay? It is just a general concept. What are your main processes? Circle back to the concept we talked about at the beginning of today's session in terms of compliance requirements, regulatory. Where are those policies coming from? What are you trying to assess? What are you trying to control? What risks are you trying to manage? Identify ways and checkpoints and verify what those are. Compare those to what your compliance requirements are and see where you are. Identify areas for either ongoing work or areas for potential improvement. You know, there's always at least a little tweaking we can do to most processes. So think of this, again, I look at this as kind of an essential process for our overall success. It's not just about the physical management of assets. It's also about the process. I refer to it as kind of the process infrastructure, all of the pieces that go around maintaining and making sure things work smoothly. So looking at, again, self-assessment, look at it as kind of a risk analysis tool. Okay? Not just the fact that, hey, the FAR says I need to do self-assessments periodically, but how can I use that same concept? How can I manage potential errors? How can I minimize? How can I raise, I wouldn't say a red flag, but identify those yellow flags that maybe are words of warning that, hey, this is an area that needs a little bit of improvement. So, Kim, any questions? We're going to start.
We do have a few coming in. If you want to pause, we've
Sure.
had some come in since the last time. Is conditional title terms and conditions listed per grant, notice of award, or from the agency, or both?
Well, the notice of award is usually, from my perspective, the notice of award is an internal document that's generated once an award is received. Okay. The conditional title, I really have never seen the word conditional title. Well, I shouldn't say never. I seldom see the words conditional title actually stated, but it is implied by referring to the inclusion of the uniform guidance. Okay. It may or may not be in the agreement itself, but it is a flow down from the requirements generated from the sponsor or that agency. The agency may issue a document called Notice of Award. The Notice of Award in and of itself may not say that, but it will include the reference to uniform guidance, and that's where you're going to get the source of that requirement. Hopefully that answered the question.
Okay, the next one is government property management at universities centralized, or is it the responsibility of the principal investigator?
It could be either. It could be either. It really depends on how your property management operation or business function is structured. Here at Stanford, we have a central office, but we also delegate a lot of the day-to-day responsibility to the principal investigator or to department personnel. I know in some universities, the research administration, the grants and contract officers have some involvement, but it's really a departmental responsibility. It can be either or some combination thereof. The key is whatever it is, you need to define it in your policy and procedures and make sure that those roles and responsibilities are clearly articulated and that training is provided so people know who has what responsibility. But it can be either. There's no set in stone business model for that.
Okay, I'll ask, I mean, there's a few more. I don't know if how much
let's do one more question, and then I'd like to finish out the slides, and hopefully we have time for a few more.
Okay, sounds good. How often do you perform a self-assessment? Do the feds tell us how often, or is it up to the university to establish something reasonable?
Whoa, these are great questions. How often? Well, here at Stanford, for example, we build our monitoring of activity into monthly activities. So I would not say that we do an event called a self-assessment. We build it into our management processes. You can do an event called a self-assessment. In cases where organizations do that, typically it's either annually or biannually. And biannual, I mean every other year, not every year. If it's based on the FAR requirement, that is always somewhat negotiable with your property administrator. Generally, I would say the guideline would be probably annually. But here again, if you can build your management, your metrics management, that's another way of looking at it, into a monthly review process, you don't have to carry on, in my opinion, a special event called a self-assessment. But ultimately, it's up to the university to decide how they're going to do it, when they're going to do it, and what they're going to look at. Getting concurrence from your property administrator is very helpful. And if you have questions or need some suggestions on maybe what to include or exclude, feel free to shoot us an email, and we'll be happy to at least share a little more about what we do. Kim, did we have one more question?
There's a couple more. So I say continue, and then we'll circle back if we have time.
Perfect. Okay. So let's talk a little bit about people. Okay. We can't do the work without people, bottom line, in my opinion. Okay. I would venture to say again that most of you really agree. Staff development, I think, is now probably more essential than ever. People are a gold resource, a golden resource. They're worth so much, the knowledge, the skills, what they bring to the table, preparing individuals, bringing up their skill set, thinking in advance where their trajectory is in terms of participation and roles. As we get, many of us are working in organizations where we're seeing more and more people retiring these days, maybe early retirement. What is your succession plan? How do you build your staff? How do you retain your staff? Investing in your personnel and in their development is one of the key things that applicants to work in an organization look for. And another key area now, which is kind of like in our face, right, is remote work. Yeah, we were forced into it in many cases over the last couple of years, but really this is the real world. This is the reality now, and I don't think this is really going away. So how can you, what are key things to manage and to be sure are working smoothly and that you mitigate any risk relative to remote work? And this slide gives you some key areas to be sure you're looking at in terms of managing remote work. One of the most important and probably, I would say, difficult things to manage are really some of the last two here, the flexibility and accommodations. How flexible is flexible? I mean, the day is 24 hours long. Is the workday, can it be spread across a 24-hour period, or does it have to be certain times? So those are some of the key things, but this is here not to get into detail, but to give you kind of a checklist of things to manage and to be sure are effective within keeping your work environment from a remote standpoint. And from a perspective of thriving, if you're the supervisor or manager and you are managing now a remote workforce, whether some of them are remote or not, chances are you're going to have a combination thereof. Okay. These are some of the key things as a supervisor to really keep in mind. Having that communication channel, frequent communications. It's really easy to get in a mode of out of sight, out of mind. Okay? So that frequent interaction. And yes, we have tools like Zoom and Teams and things like that. And thank goodness we have those tools. I don't know what we would do without them. But wherever you can, try and still have one-on-one communication, not just team activities or team interaction. When you're doing presentations, keep in mind your target audience. If it's a management presentation, keep things short, sweet, to the point, very graphical in terms of demonstrating data, not just a whole bunch of numbers on a sheet. And being intentional, I think this is one of my favorite ones on here. Being intentional, being mindful, listening to concerns and questions, and then being mindful in how you answer and provide guidance, etc. And these are all really important points. Delegation is probably one of the things we all need to work on. We tend to kind of keep close to the vest, right? What belongs to us, so to speak. But don't be afraid to delegate. And master the concepts of diversion and inclusivity or inclusion. These are right at the forefront of what we're all dealing with these days and how important it is. This is a growing area that we need to understand better and better. And not to get into a ton of detail, but just to differentiate, diversity is really having a mixed but matched set, if you will, right? You're going to have individuals, you're going to have backgrounds, skill sets, perspectives, etc., that are different. Doesn't mean they're wrong, they're just different. And then inclusion is taking all of those differences and figuring out a way to have them work effectively together. Have everyone that participates feel appreciated and recognized. And you're probably asking at this point, what the heck does this have to do with managing agreements or awards or any of the other technical aspects of what we do? This is about the people, how we do things. Because if we work in good synergy, then it's going to build that level of trust and confidence and that growth mindset, if you will, that really gives us a ton of benefits in terms of how we do things, how we solve problems, how we make decisions, how we then manage those assets that we need to manage in the way we need to based on those terms and conditions. So it's really, all of this is really quite circular if you think about it and how it influences everything we do. So why are these things important? All of these things we've talked about, not just the compliance aspects, because all of it involves people. The work, the research, the education, it all involves people at some level, okay? Fostering this concept within an organization. I was just reading a Harvard Business Review article where it says this is now a key element for business applicants. So people applying for jobs, they're not just looking for the job, they're looking for what type of an environment is it that I'm going to be working in. That has really become more important, I think, now than ever before. And in order to do this, we need to be good leaders. We need to really be good leaders to have a strong, very positive mindset. We need to build those relationships, internal, external, with our staff, with those key partners, with external auditors, etc. We need to also benefit lessons learned. Okay, share the standards. Learn from your mistakes. Okay, we're not always going to be perfect, but also in helping us do that, your third portion here, identify your brain trust group. In other words, who are going to be your subject matter experts? Who are your go-to people or individuals or groups or documents or books? What is it going to be that's going to be your go-to in terms of asking questions, clarifying, brainstorming ideas, etc. And a great part of being a good leader is if you don't have a mentor or more than one, seek one, or maybe even become a mentor to others. I think as a leader, in a way, we are a mentor to everyone in our groups and our teams, because we set the tone, we set the place, we set the attitude in terms of how we do things, how we understand things, how we apply the requirements that are circling back to the beginning of today's session, those regulatory requirements. How do we apply all that information? And it all circles around how do we communicate, how do we train, how do we establish our systems, etc. So to be very successful, understand what needs to happen, what needs to change, build that opportunity for people to be curious. Hey, I'm not just doing transaction X. What does it mean when I do this transaction? What other aspects of a transaction? Say a transfer, what other aspects do I need to consider before I make this decision? These are all things that are really, again, in another thing I was reading, another article, a survey, transformational leadership. These are things that lead to a very positive working relationship with others, and an environment where we're willing to learn, we're willing to read those exciting regulations that put us to sleep, right? And be able to understand and apply them to the big picture. So success to be, know what context, know where you're coming from on a situation, understand those fundamental requirements that we have to comply with, but keep in mind that we have to keep operations going, we have to keep people going, we have to invest in our future. And ultimately, it's up to us from a property standpoint to facilitate education and research, not to put red tape in place in terms of, no, we cannot. There's some absolutes, but generally we seldom say we cannot do something or some transaction. There's usually a way to understand what the leeway is in terms of how to handle a situation or a transaction. And with that, Kim, do we have any questions? I think we still had a couple, and we're great because I left a few minutes for Q&A.
Yes, so I do have a couple. How can equipment acquisition approval be done in a blanket way for Alt 2? Are there other reporting requirements under Alt 2?
Are there other reporting requirements? We'll take that part first. Sure, there usually are going to be interim reports, final reports. In the case of something being lost, damaged, or destroyed, there's reports required for that. So the reporting aspect really doesn't differ much whether a contract has the what I would call the base property clause versus Alt 2. In terms of getting blanket approval, it kind of depends on who your contracting officer is. And typically that can be set forth early on in the agreement. The more detailed the budget preparation is, in terms of what goes in the proposal and what gets approved, the easier it is going to be then to follow up with the getting approval to go ahead and spend the money. So a lot of that is building that relationship and that trust factor with your sponsor and what that process is. But there's nothing wrong to say, hey, we're seeking approval to acquire these 10 things. It's not like you need to send in a request one item at a time. So you can certainly group things. I suppose there wouldn't be anything wrong with saying, here's the entire list. Now, once you get approval for something on a listing, if you need to go outside of that, then that would be the exception. Anything else, Kim?
Yes. How do universities track and report items in their property management systems where title vests with the university and are not considered accountable property? Example, items less than 5,000 under grants or cooperative agreements.
Okay. If I understand the question correctly, it's essentially, do you have to report purchases of property that you now have title to? Generally, no. Okay. Unless the grant specifies, and there are some grants that you need to submit a report just saying, hey, this is what we purchased this period, and confirming that we now have title per the terms of the grant. Unless it specifies that type of reporting, generally the assumption is you have the clause, you have the title, you record it in your system, you always keep track in your system of who funded that asset, okay? And that's where knowing the funding of an asset, remember that conditional title where I mentioned that there could be a period where the sponsor might recall, this is my term, right? They may recall the item or request for you to transfer it elsewhere. But knowing that source of funding is going to give you the tie to know if that conditional title applies or not. But do you have to formally report property to which you have even conditional title on a grant? Not unless the grant specifically says you have to.
Okay, we're running really close to the top of the hour, so I'm going to ask one more question. There's more in here, so if your question didn't get answered, maybe Yvonne, I'm going to say they can email you directly.
Sure, absolutely.
Okay, because then I will ask this one and then wrap up. I have a couple announcements. So who owns the equipment when you reimburse faculty for the purchase? Are they allowed to keep it when they leave the university?
Oh, wow. Okay, do we have a week? Who owns the property? Well, in short, it's going to depend on the funding, the reimbursement source of funding. Please, and I would strongly discourage, although I know it happens and we've seen it more during COVID, that faculty will go out and purchase an equipment and then ask for reimbursement. On occasion, that can be a direct charge to an agreement. Generally, it's going to be departmentally owned. I would say never ever should it be owned by the faculty as an individual. If so, then they get a 1099 because they now own that property and it becomes taxable income for them. So clarify that in your policies and procedures, but generally it is not owned by the individual. And
okay, great.
I'll clarify that a little more if whoever wrote that wants to send me an email.
Okay, thank you. Thanks, Yvonne. I'm going to go ahead and wrap us up since it is the top of the hour. I'll be mindful of everyone's time. I just wanted to give a few announcements. One is our final webinar is scheduled for next week, Thursday, March 31st at 1 p.m. Eastern Time. Ms. Connie Aaron will be presenting on federal fleet management. You can register for this webinar on our MPMA website under Asset Management Awareness Month or through any of the news flashes where the links have been provided. There's also still time to go and complete the 2022 member survey. We encourage everyone to complete the survey and provide us your feedback. And then we'll be randomly selecting winners for those who participated, some Amazon gift cards and one grand prize of $100 MPMA voucher. And then we're also still selling NPMA men's and women's polo shirts until the end of March. Proceeds go to the NPMA Foundation. The shirts are $35 plus shipping and handling, and then they're delivered directly to you when the fundraiser ends. Again, you can find all this information at the Asset Management Awareness Month page. And then lastly, if you're still interested in attending the 2022 Spring Education Seminar, it's going to be held in Cincinnati, Ohio in just a couple weeks, April 5th and 6th. So there's still time to register if you head over to the NPMA website. And then I hope everyone enjoyed today's presentation. I always learn a lot when Yvonne talks because university is not my thing. So great information today. And then I hope everyone has a great rest of your day. Thanks again, Yvonne.
Thank you, Kim. And my email is there on the last slide, so they can feel free to email any questions they may have. Thank you so much.
Great. Thank you. Bye, everyone.